David, earlier we were talking about the developments of 2020, and we were looking for a new word other than extraordinary, and it also applied to what the Fed has orchestrated this year. Extraordinary doesn't really cover it. We need a couple extraordinary squared, maybe. So not everything the Fed does goes to where it's needed. I would imagine, and they said that's fine. We'll overshoot. We'll do more than we need to, even if it's not all going to where, it's filling a hole. It's just, it's just additional money. Given those IPOs last week and some of the froth that maybe we're seeing in certain areas, do you think that there is some asset inflation that there is going to be a reckoning with at some point because of all the cheap money?
I think that the cheap money has an impact, Joe. There's no question that the Fed actions and the monetary policy and the relief was very, very necessary. You heard Warren say it earlier. I think through the actions, we certainly staved off something that could have been a lot worse, but there's a consequence to that. And there's no question that people are out on the risk curve, and that is certainly inflating asset prices. People with long assets have benefited from this. Some of what's going on when you translate to the IPO market is obviously directly related to that. And I think some of that is related to certain other phenomenons. I think one of the things that's interesting is there's a lot more retail participation in these IPOs. And I think one of the things to contemplate or think about, Joe, is, and all of us that are on this call remember well, the period of 2000 and 2001, there are real differences. If you wanted to buy a stock back then, you had to go and open up a brokerage account. You had to sign papers directly. Technology enables, and it makes it a lot easier, and it broadens participation. And so there's a lot of retail participation in a bunch of these IPOs. I think that's something to watch, something to be cautious about. I think a bunch of these are great businesses, but obviously the market at the moment is pricing in, perfect execution and enormous growth for a very long period of time. And my guess is there'll be a rebalancing of that over time for sure.
And David, related to that, you saw Affirm and Roblox postpone their IPO after the Airbnb IPO, which I know Goldman advised on. Are you advising companies to hold off? Do you look at the Airbnb IPO as a failing insofar as not being able to adequately or accurately forecast, what the market looked like at that moment?
We're obviously involved in a number of IPOs, Andrew, and we're not advising people to hold off. And it's actually interesting. There hasn't been a lot written about this. The process in some of these recent IPOs, including Airbnb, we've developed much more transparent market information for the company where they can really see real time the demand that's coming in, and they make decisions around this. And I think one of the things that's not well understood is the companies themselves are choosing their investors in the context of this. They have much better transparency than they would have had 5 or 10 years ago about the choices they want to make around this. But despite making those choices, if people are going to come into the aftermarket and buy the stock and continue to run the stock price up, that's something that's very, very hard to control and very hard to think about. So a lot of these companies are taking a long-term approach. They want to build a reasonable shareholder base, and they're very thoughtful about that. They have better transparency. And also, I just highlight, they're selling very small portions of the company, and they really are trying to position for the long run. And so I do think we're at a moment in time where there's a lot of euphoria. I personally am concerned about that. I don't think in the long run that's healthy. I think it will rebalance over time, as it always does. But I think there are a lot of great companies that really have extraordinary growth prospects that are going to continue to come to market. And obviously, we're reaching the Christmas holidays, so that'll all slow down. And my guess is it'll pick up again in January.
Shepard Smith here. Thanks for watching CNBC on YouTube.